Hi, everybody, and welcome to our latest episode of the Manufacturing Minute, where our goal is to update you on trends and hot topics shaping the world of manufacturing. As an introduction, I am Megan Meador. I'm the host of today's podcast, as well as all of the Manufacturing Minute podcasts. I'm an audit and assurance partner with Brown Edwards. Brown Edwards is a top 100 regional firm with offices in Virginia, West Virginia, and Tennessee, and we offer all kinds of fun and exciting accounting and consulting services. You can visit our website at becpas.com for more information and to view all of the services that we offer. I am also the manufacturing and distribution industry leader. I'm based out of our Bristol, Tennessee office, but I have clients all over our geographical footprint. With all of that said, today I'm very excited to introduce our guest speaker, Nick Janda. Nick is with the Specialty Tax Group, and today we are going to chat all the things about R&D credits and studies and how this can help your business. Nick, you want to do a little introduction?
Sure. Yeah. Thanks, Megan. Glad to be here. Like you mentioned, I'm Nick Janda. I am the R&D Tax Credit Director at Specialty Tax Group. So we're a specialty tax firm based in Alpharetta, Georgia, and we do R&D tax credits, cost segregation studies, as well as several other renewable energy credits and state credits and incentives. I've done R&D tax credits most of my career. I've been in public accounting for 10 years and done R&D tax credits for 8 of those. And it's a great incentive. I love working with clients across different industries, educating people, learning in return what they do, and helping them claim these R&D tax credits so that they're not leaving money on the table. They can reinvest it in their own businesses. So I'm excited to talk about it. Again, it's not something that everybody is aware of, so I'm always happy to help educate and answer questions, and I'm looking forward to diving into it with you.
Yeah, absolutely. Thanks for the introduction. So let's just dive right in if that's okay. So Nick, what is an R&D credit? What is that all about?
Yeah, absolutely. So it's a tax credit. So it reduces a company's tax liability dollar for dollar. And it is a credit that can be claimed by any company who is creating something new or perhaps taking something existing, a product, process, technique, formula, or invention, and substantially improving some measurable aspect of it, making it better, cheaper, faster, stronger, adding functionality, performance, reliability, or quality. So if you're making something, either manufacturing a widget, developing a software application, or even doing activities across a bunch of other different industries, and you're spending money on these R&D activities, you can actually recoup some of that cost, again, as a tax credit that reduces your tax liability dollar for dollar every year on your tax return.
That is super cool. And I'm going to a lot of local manufacturing conventions and meetings that they have. And one of the things that we always talk about is what's the best and new coolest thing that they're making, right? Like all of these people are making one step better of a product that they currently have or something new that's working for a specific customer order or something that has come in. So I always kind of nudge them and say, "Hey, have you thought about R&D tax credits or a study that might help you?" So what's the benefit of this and how much can companies expect back when they, are thinking about these R&D credits and what that means for their tax liability?
Yeah, that's a great question. A common one is, this benefit's cool, but how much can I expect to actually get back from it? And so typically the quick back of the napkin math of the calculation is you can expect somewhere between 8 to 12 cents back of every qualified dollar. So there's a couple different costs you can take a look at. It's going to be wages for people who are doing R&D, B2 employees, 1099 contractors, third-party contractors who are assisting with R&D efforts. And then in terms of manufacturers, we can look at scrap materials for prototypes, supplies, things that are used and consumed in the R&D process. And on the software side of things, we can actually take a look at cloud computing costs. So if you're using AWS, Azure, Google Cloud, some of those costs qualify as well. So when you take all of those together and you peel out which pieces of those are related to qualified R&D, again, you can expect somewhere between 8 to 12% of that back. So I've worked with clients where a credit can be $20, $30, $40,000, which is a great benefit, all the way up to over $1 million, depending on the size of the company, where everybody's located and how intensive the R&D is and how large the company is too. So again, it's a great benefit. If you don't take it, it's kind of just leaving money on the table.
Absolutely. I think that I was copied on some emails just this morning where your firm was doing an R&D study for one of our mutual clients, and I don't wanna give a sneak peek or, disclose any privy information here, but, I believe that credit number was 6 figures, and so that's a huge impact when you're talking about especially smaller companies or privately held companies. Every dollar counts, right? I mean, it hits the bottom line. It's more cash that you can future invest into your company moving forward. So, what kind of activities qualify when you think of R&D?
Yeah, absolutely. So the best way to think about it, there's what's called the four-part test for qualifying R&D. And so really at a high level, that's going to be a project or activity that's undertaken with the goal of either creating something new or improving something that exists. And that's done through the resolution of scientific or technological uncertainty through experimentation. So breaking that down into its four component parts. Again, your activity or your project needs to have a permitted purpose, which I always think of again as a goal. Maybe I'm making a new software application either from scratch. Maybe I've got a platform that exists and I'm substantially improving the functionality of it, adding more features and modules, taking it from version 1.0 to 2.0. Maybe I am inventing a widget of some type, a product. I don't know how it's going to work. I'm going to improve it in some way. That's my goal. So there needs to be scientific or technological uncertainty. It just needs to be based in a hard science. So I think of the STEM fields, physical science, biology, chemistry, engineering, just again, the hard sciences. And then there needs to be some kind of technological uncertainty about it. So I'm thinking back to my goal. I'm a competent professional. I've been doing this for 10 years, but I don't know what the appropriate design is going to be. I don't know what methodology I'm going to use. Maybe I don't know if we even have the capability to do this. I know we need to go from point A to point B. I see the destination in my mind, but I don't know what path is going to get me there, or again, if that path is even traversable from the beginning. Thinking back to your high school science class, you think of the scientific method. So we're going to establish a hypothesis. I think this might work. And then I work through that. I do different iterations. No, that didn't work out the way I thought it was. Let's go back to the drawing board. Let's tweak some variables. Let's try again. I'm working through this systematic process of experimentation, evaluating different alternatives until again I either achieve that goal, I've got my product or my process, great. I can put it to market. Maybe I scrap the goal. It wasn't feasible. We couldn't figure it out. We don't have the resources right now. We're either going to just shelve it and maybe we'll come back to it, or maybe we'll just chalk it up to a learning experience. Those are the kinds of activities that qualify. And the projects don't need to be successful to qualify. Again, we just need to go through this four-part test. So again, we've got our goal. We're making something new or improving something. It's based in a hard science. There's technical uncertainty, like a knowledge gap exists on how to achieve it. And then we're working through that process of experimentation until we either get there or maybe we try again later.
So this is different a little bit then from the typical R&D capitalization criteria that falls under GAAP, right? Because GAAP, most of the time in the manufacturing space, there are some exceptions, and I don't want to just blanket that, but usually R&D is always expensed, right? So then when you think about this being a true ability to cash reclaim or recoup those expenses, that's nice to know that you can do this study and go through this process whether or not the R&D activities were successful, right?
That's correct. Yeah, exactly.
So, what are some recent trends that you've seen in this R&D credit space in the recent years?
Yeah. So there's a couple different ones I've seen. One is going to be related to Section 174 R&D capitalization, which we'll cover in another episode.
Stay tuned, right? Stay tuned for that one to come.
Yeah. So a quick preview into that though is that was not great tax policy from an R&D perspective. So we have seen less investment over the past couple of years, specifically 2022 onwards in R&D as a result of that unfavorable tax change. So that's been a pretty common, we've reduced headcount or we've just haven't taken as much on recently. We've had capital projects that we put on hold or shelved for the time being until something changes. So we've seen a reduction in R&D in a lot of cases. That's been fixed now, so I anticipate that rectifying itself going forward. In terms of other trends in the R&D credit space, the law itself, like the code section that governs the R&D credit, hasn't really changed, but we pay a lot of attention to how the IRS looks at R&D tax credits. So it's a great benefit. It is one that does get abused sometimes. So sometimes it is looked at with some scrutiny, and there's a lot of court cases around the R&D credit. It's pretty subjective in some cases, what kinds of activities qualify, what don't. There's a lot of potential pitfalls as well that can trip up taxpayers who are trying to claim this without professional guidance or help. It is a pretty complicated area of the tax law. Even though it's just one tax form in many cases on the tax return, it's actually quite complicated. So we pay a lot of attention to court cases here. And the biggest thing we see recently is just documentation is so important to claiming these credits. What was your goal? What were your technical uncertainties? It proved to me that a substantial amount of the time to resolve those was related to this process of experimentation. And that documentation can be things like drawings and design documents, CAD. It can be even email threads discussing technical issues, photographs, Slack or Teams conversations, calendar invites, meeting minutes for R&D credits, things that really help show the changes between iterations and what was that process of experimentation to get there. So every year that just becomes more and more critical. So that's something we always try to help people collect and understand is like, how do we actually document this to prove, yes, we did indeed do these things. And to further highlight that the IRS does, again, just want more qualitative detail with these claims too. The actual tax form, I mentioned it's one tax form on the tax return. It's called Form 6765. It has had some updates in the past couple of years to provide more detail. It asks about controlled group rules. It asks about how many business components are you claiming the R&D credit on? How many officer wages are included in this credit? Just more detail and documentation. Eventually, it's going to also require for companies with more than $1.5 million of qualified expenses. Okay, you've identified however many business components, which again is like a product, process, technique, formula, or invention that a taxpayer uses or holds for sale, lease, or license. You're going to need written detail on what each of those business components is, and that gets submitted with the tax form too. Whereas in the past, it used to be how many wages, how much in contractor spend, how much in supplies, and that was about it.
Right.
So that's probably the biggest trend is just, again, the IRS kind of trying to tighten it up a little bit just to make sure that people aren't abusing a great benefit and are following it kind of to the spirit of the law to encourage innovation and R&D here in the United States.
Of course, and I guess this is a shameless plug too, where proactivity and discussing this with your tax professionals and your service providers so that you can be ahead of the game when it comes to documentation and what to expect if you're just in the start of thinking about this R&D project for your company. Meet with your tax professional so you can get ahead of what's going to be needed if you do end up trying to apply for the credit and then the documentation is necessary. Those proactive conversations are more and more important, again, just to be able to support the position, right?
Yeah, absolutely. Being, it's definitely an ounce of prevention's worth a pound of cure in these cases. So that's
Absolutely.
something that is always better to establish. And then it's much easier also to just add to things, maybe a central repository or a shared Teams channel or something for your engineers or your product team or something like that to drop documents in as the year goes on. It's always much easier to do it and you're supposed to do it contemporaneously. So as things are happening versus trying to, scramble back a couple years, a couple months, do the memory recall exercise later. I can't remember what I ate for breakfast most times. So I'm always amazed when people do have memory recall of a year plus ago. So yeah, being proactive about it is definitely the best way to make sure that it's successful and easier on you in the long run.
Absolutely. So with your experience, Nick, it sounds like you've been doing these for a pretty long time now. What are some of the biggest mistakes that companies are making when they're trying to claim the credit?
Yes. So I mentioned earlier there are a lot of pitfalls with the R&D credit that people might not think about or understand. So asking the right questions is really important. One that I see a lot, I mentioned controlled group rules. So for the R&D credit, if a company has common ownership more than 50% with a couple, like two or more owners or one or more owners, with a different entity, like more than 50% common control, technically those credits should be evaluated together, that those companies are treated as one taxpayer. So all the expenses go into one pool and then the credit's calculated that way and then is allocated out pro rata to each company. That's missed a lot. There's also funded research exclusion. So many times a taxpayer might be doing a project or an activity specifically for a customer where they enter into some kind of contract. And in some cases, the IRS could consider those projects actually the customer's R&D, where they should be claiming the cost. They don't want two different companies claiming the same cost and double dipping in that sense.
Of
So
course.
um, if a taxpayer engages a customer and they're paid time and materials for their work, or it's not a contingent or success-based payment. They're getting paid regardless of the outcome. In many cases, that's not considered as the taxpayer having the financial risk of the development. It's technically the customer's R&D. Same thing with intellectual property rights. Let's say a software developer that only does works for hire for people is claiming an R&D credit. They don't own what they make at the end of the day. Maybe the contract says this IP passes exclusively to my customer. I don't have any access to it or rights to it at all. That's the customer's R&D. So if the taxpayer is claiming the credit on that activity and it gets audited, it'd be disallowed in its entirety. So there's all sorts of things like that can really trip up an R&D claim. The same thing, sometimes people are claiming too much. They're claiming marketing or travel, meals and entertainment and other overhead for the R&D credit. Your Office 365 subscriptions and Adobe and Jira and all these things. And that's not something that's actually included for the R&D credit. And on the other side of that coin, sometimes people aren't including enough. And so they're underclaiming. A software developer is using AWS for cloud space, anything that's sort of pre-production where they're doing their development, their staging, their UAT and everything like that. You can claim that for the R&D credit. And some people don't know that, they're not claiming it. So that's just dollars that's being missed out on. So it's very easy to make a mistake and either claim too much, too little, or just something that's entirely incorrect. And again, which is why it's best to engage with somebody who is a professional and can ask the right questions and go through the spider webs for you to make sure that you don't get tangled up in them yourself.
Yeah, absolutely. Again, proactive communication and planning on these things. What should people be tracking specifically? What shouldn't they be? What's included? What cost saving measures can they do? All of those things are very important when you're having these discussions. So, what about our folks, startups or maybe companies that are running at recurring losses that aren't in a current taxpayer position? What would attract them to want to do some kind of R&D credit or R&D credit study?
Yeah, that's a common question we get to, especially in the tech startup space. I'm got lots of NOLs, even with the limitations. I'm not going to be in a tax paying position anytime soon. Why would I need a credit? Maybe I could carry it forward. The credit does have a 20-year carry forward period, the federal one. But sometimes, cash is king. I need that money now. I could invest it in something else. So there's a couple different reasons why you still might want to take an R&D credit. One is if you are an earlier startup company, there's actually the potential to use the federal R&D credit to offset some FICA payroll taxes. the employer side. And if you've got employees, you're paying payroll tax. So
Absolutely.
that enables you to use the credit essentially right away, gives you a more immediate benefit. And again, when early startups need that cash, that's a huge chip in their pocket. That's awesome. There are some limitations to that. You can't have more than 5 years of gross receipts, and you can't have more than 5 million in gross receipts in that tax year. And you just can't claim this benefit more than 5 times. So those are the thresholds there. That's federal. Well, actually, I'll plug my own state. Georgia is the only state that allows this as well, where you can actually use the Georgia R&D credit, again, to offset state employee payroll withholding. So I've worked with many clients who you have to claim a federal credit to claim a Georgia one, so they'll just carry that one forward, but they engaged and do a study purely for the Georgia benefit, again, because you can just elect to use that against the state payroll tax, which you're paying regardless of if you're paying income tax or not. Other potential benefits, if you anticipate being taxable in a relatively short time frame, then the R&D credit is technically for increasing research activities. So the first year you claim it, we're actually looking at least the prior 3 years worth of data as well. So that builds your base period of R&D spend, and we're measuring your increase or decrease in the current year based off that base period. So the first year you claim it, it's always a little bit more work just because you'd be looking at a couple different years instead of just the 1 year at a time. Every year going forward, again, it's just 1 year at a time. So it's always easier to do that sooner rather than later because it's just easier to recall everything and find that data. Things start to get fuzzy as time goes on. So front loading that work and just getting it on your tax return. And then when it kicks in your taxable income, you've got the credit all ready to go to offset that. It's a timing thing. So there's a couple different reasons why you might want to go ahead and start doing the R&D credit, even if you aren't necessarily in a tax paying position.
No, that's interesting. So, as I'm talking with my clients about, usually audit or consulting services throughout the year, I do try to keep an open mind and an open ear to the things that are going on inside of their business that would provide them an opportunity to apply for not only an R&D credit, but other, state or local specific credits that are out there. So if we identify that specific trigger that they might be able to apply for and potentially receive an R&D credit, what are some things that I could help them do to get prepared to go through something like that?
Sure, absolutely. I think just again, encouraging documentation is always going to be the biggest piece. Kind of figure out what we're doing, what do we have on hand that can prove that out, identify who might be the best people to speak to an R&D credit provider, the subject who's going to be our subject matter expert, and then kind of help explain the benefits of the R&D credit. And of course, a provider can do that as well. It's really just kind of setting the stage, I guess. It's money back. It's a great benefit. It sounds like you could potentially qualify for this, which is great, even if it doesn't seem like there's an opportunity either currently or maybe based on what they're doing, or maybe there will be an opportunity. It's great to know that people are looking out and we're kicking every rock and just making sure that value is being added and provided to everybody.
Absolutely. I mean, we want to provide the best value to our clients, right? And how better to provide that value than cash in their pocket.
Of
So,
course. Yeah,
our job is to minimize tax liability just like everything else. And so, we always want to keep these types of credits and opportunities in mind always.
for sure. Yeah. It's a great benefit, and it's surprising sometimes which industries could potentially have a claim. I've seen a couple of industries people might not think about: brewing and distilling, could potentially agriculture, engineering and architecture. There's a lot of things out there that are beyond just the basic manufacturing and technology of the world that could also take advantage of the benefit. It's a great one. It is not necessarily just for the folks in white lab coats. That's the very common metaphor. Grows much beyond that.
Yeah, that's an excellent point. I mean, I know the purpose and the focus of this podcast is for manufacturers and distributors. However, it's interesting to know that it's available for all types of industries as well.
Yeah, absolutely.
Well, Nick, we appreciate your time today and for joining us on this Manufacturing Minute podcast. We wish you all the best, and please, for those listeners out there, reach out if you have any questions or want to chat further about potential R&D credits or studies that your company might want to learn more about.
Yeah, of course. Thanks for having me. And similarly, I love talking to people about this, learning what they do, seeing how we can help. It's very fulfilling, and it's nice to help people out. So thanks again for having me. I'm always happy to talk about R&D credits.
Absolutely. Thanks, Nick.